That means that this area here is the most recent low. I mean, look how perfect that is. The wicks and the bodies pretty much come straight to that reaction leg. Isn't that amazing? Hello traders, and welcome back to Mindfully Trading. If you're new here, welcome. My name is Emily, and in this video I'm super excited to share with you my weekly outlook for this week, the week commencing Monday the 21st of April. I'm going to start this video with an update on my prop trading account with the broker, the 5%ers. Then we're going to look into how to carry out key fundamental analysis for the week. I've received a lot of questions about this, about how to check out news, so that is coming up in this video. Following that, we're going to hit the charts and we're going to go through some technical analysis, looking at a variety of different asset groups. I'm going to look at some pairs from Forex, I'm going to look at gold, the indices, and also Bitcoin if we get time. All of the resources that I will be using is linked in the description below. I'm sharing this video with you for free. In return, I only ask that you smash that like button and subscribe if you're not already subscribed to the channel. Let's get to it. Here I am in MetaTrader 5, the platform that I use to trade my prop trading account with the prop firm, the 5%ers. I passed my funded account challenge at the end of last year, and I've been trading my hypergrowth program ever since. I'll talk more about the hypergrowth program and the other programs that 5%ers offer later in the video. I wanted to take this opportunity to learn for myself as well where I am in April. I haven't actually looked at my account history. And you may be shocked to see that I don't really take that many trades. I'm recording this on the 19th of April, and so far we've had 1, 2, 3 full trading weeks. Out of those 3 trading weeks, I have taken 8 trades. And this is quite a lot for me. I usually only take a couple of trades a week. That is just due to my own personal lifestyle. I juggle day trading together with being a full-time mother. One is 18 months old and the other is 3 years. Let me tell you, juggling these 2 preschoolers and day trading is a handful, which is why I only trade a select amount. But it's nice to see that I'm still up in profit on my funded account so far. Moving on into next week, we've got one more full week of April, keeping in mind that Monday the 21st is a bank holiday here in the UK, which means that the trading volume is very likely to be low. And then before we know it, we're entering May. Can you believe it? Before I even enter onto the trading charts and even think about technical analysis, my first step in carrying out my weekly outlook is definitely looking at any upcoming news and economic events that are planned. This is crucial because these can act like a catalyst. They can produce momentum, which can be the difference between an asset going up very quickly or down very quickly, or even going nowhere at all. If you are a day trader or a scalp trader, it's crucial to check out the news. And if you are a swing trader, it's still super important because you may benefit from trailing a stop loss or catering your trade management as per those news releases. So here we are on forexfactory.com. I've gone onto the calendar tab here, and I have this filtered on high impact, which is the red and the orange box. Looking at all of the major Forex pairs. This doesn't have any upcoming news for indices or gold, but there are other resources that you can use for those. Monday, the 21st of April, is a bank holiday here in the UK and also across Europe and in Australia. So it's very likely that there will be an incredibly low trade volume. In fact, it may be wise to just sit out Monday altogether. That is what I will be doing. Tuesday, there isn't that much going on Tuesday. In the afternoon, we have some sort of minor news release for the euro and for the dollar. Remember that I am based here in the UK, so any times that I refer to are in GMT. Wednesday looks to be a more interesting day. We have got the Flash Manufacturing PMI and Flash Services PMI. These are released monthly and they are released scattered throughout the day. So you can see we've got 8.15 euro, some more 8.30, 9 o'clock, 9.30, the same but for pounds. From my experience, these days when we have this type of news release, I prefer to just sit it out because it creates a constant volatility in the market. And if you are a scalp trader, that might work for you. But for me, day trading and holding positions for longer, it just makes it a mess. In the afternoon at 2:45, we have got the same Flash Manufacturing PMI and Flash Services PMI for the dollar. This may be a better time to take advantage of any trades that have the dollar in because the news has all been released and the dust will have settled and you might have a more clear indication as to the trend direction for the day. Moving on into Thursday, the major news event of Thursday will be unemployment claims for the dollar at 130. That is a weekly event. It happens every week on a Thursday. For me, that creates a nice consistent boost of volume into the market following that news release. And so I will wait until after that's been released to look for trading opportunities. It's also a bank holiday for the Australian dollar on the Thursday. So if you like to trade Australian dollar, US dollar, you may see some lower levels of movement. Moving on into Friday, we have got retail sales being released for the pound in the morning. And in the afternoon, retail sales for the Canadian dollar, nothing major for the US dollar. So we've got a mixture of bank holidays and news releases this week. Now let's jump onto the charts, carry out some technical analysis and see if we can gain a technical idea of where we feel assets might go. If we can get a bias on the trend, whether we're looking to go long or short, then it's simply a case of waiting for these news releases to see if they confirm that technical idea. A collusion of technical and fundamental analysis will help you to form better trading decisions. Firstly, let's look at pound dollar. I'm here on the daily time frame. I didn't actually trade pound dollar last week because I was super busy with some planned family and friends events, so I decided to take the week off. But it looks like it continued to trend upwards very slowly but surely. However, we are currently in between these two shaded levels that I have drawn from the daily. These are two fair value gaps that I had drawn from this previous swing. And if we zoom out further, you can see the implications this may have. Very simply put, price has pushed up, it came back down, and it actually broken the swing here. And now it's pushed all the way back up to retest this previous swing high. We're in between these two fair value gap levels. Price may do one of two things. It's going to go up or down. Yeah, I know. That is the trick of trading. Why don't you point out the obvious? But hey, it's got to be said. What I'm interested in observing is whether price is likely to pull back down, find some support at this fair value gap and push up, breaking this high. I think that's quite a likely situation because we've had such a momentum recently on the daily. Pound has been strong against the dollar. Plus, there will be a lot of liquidity sitting above this point here that price will be drawn to like a magnet. Alternatively, there's always the chance that we may get some rejections here at this fair value gap level. We may get some sharp momentum drops and we may even get a trend reversal and see a downtrend forming. Needless to say, although pound dollar, looking at recent price action, is in an uptrend, it's starting to curve, it's starting to lose momentum. We've got some very short body candlesticks here. A lot of traders are sitting out and not trading and it's not going anywhere. We need to wait for some clear momentum to see if this uptrend is going to continue, if we're going to blast past this fair value gap, or if we're going to see a trend reversal to the downside. For me as a day trader, I will be waiting for those key news releases because that is what we need at this moment, is we need some momentum. And depending on what direction we go in for those key releases, I will be looking at key daily levels. For example, if we get a push down, we form a bearish candlestick, I may be looking for a break of the previous daily low for some scalping opportunities, and the same for the reverse. If the trend continues up, I'll be looking for breaks of the key daily levels and aiming to get in for longs. Until then, I'm going to set an alert at the lower of this fair value gap in case we get a pullback down, because that might be a good place to get in long. And I'm also going to set an alert above this fair value gap, because if price pushes up and breaks above, that could show a lot of strength for continuations long. Another thing I like to do looking at the daily time frame is you can see very clearly here that we got this push up, a high forming, a low, which was confirmed because price pushed up and broke and closed above the high. That means that this area here is the most recent low. And I'm going to use that to draw my Fibonacci retracement tool from using the bodies only. And I like to frame out this area, the optimum trade entry level. If you want some more information about that, I do explain it in a separate video. Check it out above. Quite simply, I'm going to leave this area in because if we do get a short-term downtrend, that might be a pullback to this area. Something like this. All we can do at traders is speculate, analyze, and wait for confirmation. But if you look on the 4-hourly time frame for pound dollar, it's still holding on to that uptrend. We've been pushing up. It looked like we might drop, but it's gradually just pushed higher and closed above this previous high. So the bulls are still very much in control for pound dollar at the moment. And I will use this pullback here on the 4-hourly to place my Fibonacci tool from, and to create another box here on the optimum trade entry. Because if price comes back down to this fair value gap here, it may find some support from this area, which may provide a nice opportunity for a long for trend continuation. These are just some scenarios that I'll be watching for pound dollar this week. Moving on, let's explore gold. Now, personally, I don't trade gold very often at all. I trade it for long-term investment only, but when it comes to day trading, I mainly stick to what I know, and that's pound dollar. But it goes without saying that gold has been catching my eye lately. It's been making some very strong pushes up. In fact, we are at all-time highs for gold. And this is such a beautiful chart to look at on the daily. I love a chart that is just so clear. It's clearly going up. I remember watching gold a couple of years ago when it was at this high here, at this point, and I remember a lot of the gossip saying it's the worst time to buy gold because it's at the highs. And that's why I find it quite amusing, because nobody really knows what's going to happen. If you listened to that and waited for a drop, you wouldn't have gotten one, and it jumped from 2,000 all the way up to 3.5. Will it keep going up? That is the question. Looking at this for more long-term investment perspective, it doesn't really feel like a good place to buy right now, because we are at those all-time highs. And we've not just been gradually going up like this. Recently, we've shot up with big momentum candlesticks. That can sometimes be an alarm bell for a trend getting exhausted. I'm not saying it's going to drop, but there's always going to be that chance. So I like to take the most recent obvious pullback that we see. I'm talking about how deep these reaction legs are. There's a really useful tool you can use, the Fibonacci extension tool. And I have this set up so that it can measure the length of a pullback, a reaction leg. This one right here is smaller than this one, which means that this one right here is the biggest reaction leg. It's the deepest pullback that we experience. The most recent pullback on the daily time frame doesn't quite meet that. I like to use the deepest pullback for the Fibonacci retracement tool to go from. And once again, I will just mark my 3 areas of optimum trade entry as a place to observe. If we start to experience a range and then perhaps a pullback, this may be a good place for price to fall into to buy with the intention of getting onto that uptrend. But this is based on a very long-term perspective. This is certainly not scalping. It's not day trading. It's on the daily time frame, and this will maybe even take weeks or months to progress. But that's my play for gold. If I was to day trade gold, I would definitely be looking to capitalize on these daily momentum pushes up by looking for breaks of the previous daily high and utilizing trend continuation techniques, looking for longs. If you want some more information about the strategies that I use to day trade in this way, I go into it in more detail in my book, Forex Trading 101. It's a complete guide for beginners. There's a link below in the description, so make sure you check it out. Let's have a look now at the SPX500, which I can pretty much guess before I loaded this chart up that it will be the inverse to gold. Generally, if the stocks are going up, gold is usually not going up. And if gold is going up, well, the stocks are usually struggling. And that's what we are seeing at the moment. So the American stock market, the SPX500, 500 of the top stocks in the US stock market, has been coming down very sharply. Now I'm on the daily time frame, and I'm going to just zoom out so that we can see just how severe this drop has been recently. I'll remove this for now because we will explore that together very soon. But here is the SPX500 zoomed out. I mean, this is looking over the past 10 years. 10 years worth of data. That's reliable information that we can use. That's why I like to look on the daily time frame when it comes to these kind of asset groups for long-term investments. We had this large drop down here in 2020 around COVID time. That was a strong correction on the market. Let's measure that reaction leg down here that fell into this structure. And that is very similar. If we drop that here, I mean, look how perfect that is. The wicks and the bodies pretty much come straight to that reaction leg. Isn't that amazing? I love technical analysis. It's so satisfying. But this reaction leg, this pullback that we experience here, this was from January 2022 until about October 22. Pretty much all of 22, it was pulling back until it took off. Now, you will see that we do get these phases, these market phases in the larger stock markets, where we will get a bullish phase and we will get a bearish phase. Following the COVID drop here from March 2020 up until the end of December 2021, for just under 2 years, we were pushing up. Then for the year, we were pulling back. But October 2022 up until February 2025, so that's just over 2 years, we were pushing up. This could indicate that this year we may just see a big drop down, like we did here, like we did here. The market repeats itself. It goes through phases. And I really like it when it does this, because for me, this is just discounting all of the stocks to a price that I prefer to buy in at. Now I'm going to drop the reaction leg that we used here that match up with this one right to the highs here, and look at this. If I zoom in, price comes down almost perfectly to that reaction leg. And then we got on Wednesday the 9th of April, this huge bullish candlestick push up, an engulfing candlestick engulfing the prior 2 days. This could already be indicating a reversal in SPX. And this kind of technical analysis, it can help to add an area of confluence to analysing other asset groups. So before, if you remember, we looked at gold and we analysed that gold is starting to look quite extended and it may drop down. Well, this confirms that looking at the XPX500, because we've come back to this key level, technically speaking. We're getting a signal for price reversing and going up. And we know that when the XPX is going up, gold is generally not going up. Analysing the different groups in this way can really help you to formulate a bias as to whether to buy or to sell or to wait. I'm going to add my golden line here that marks the reaction leg, and it's almost a nice break and retest of this previous swing high as well. I do have a watch list of various stocks that I like to follow as per my investment strategy. Investing is something that I've been doing for years, but I've never really shared on this channel. This channel is always stuck with day trading Forex. But if you are interested in learning more about my investment strategies, if you want me to share more content about that, about investing in stocks, do let me know in the comments below, because it may be a really interesting change on the channel. I like to just dabble with the different facets of the financial markets. We've done Forex, we've done a metal, a industry. Now let's look at crypto. And Bitcoin, let's be honest, this is pretty much the king of crypto. It is the most commonly known, most popular crypto coin. And I like to watch Bitcoin because it can help to give a bias on the overall cryptocurrency market. Now I am pretty much zooming out all the way again here on the daily, because it's really nice to get an overall image of the macroeconomic state for Bitcoin. So looking back, this dates back to 2018. And Bitcoin, it's safe to say crypto in general is very choppy, and I think it's a very unpredictable market. I'm still not totally convinced with cryptocurrencies. But Bitcoin has been consistently going up, making higher highs and higher lows. Very deep pullback here in 2022. We got a push here in February 2024, just before the halving, and price came down here July 24. Then we got a push up towards the end of last year, where we broke that $100,000 mark and made a new high. And since then, price has been coming back down. So the big question could be, if we are looking to go long on Bitcoin, where is a good place to buy? Well, as this is the most recent pullback here, this is the one I tend to focus on for my analysis. Let's use that really useful tool again. And I've got a feeling that we may have already broken this retracement. We have seen. So looking at that most recent pullback, that reaction leg length, from the high currently, price has already broken and closed below that. That could be an indication that Bitcoin needs to drop down further. And my biggest alarm bell is the fact that we already had it where we had a high here and a pullback and a slight push above before a very deep pullback, coming back almost down to this previous one here. I wouldn't want to buy Bitcoin at this level here for it to then just pull back deeper like before, when I could have brought down here. So let's explore the option of if it did that. I'm going to use that reaction like measurement tool again, but going from the deepest pullback that we experience, the one that was back in 2021 till 2022. And if I drop that at the high, you can see that that one would come all the way down to here. Now, that looks more realistic to me, because if price drops down to this level, it's using a reference point from historical data, technically, and also it won't be breaking this recent pullback. It may use it as a double bottom to build some support to push higher. But as always with trading, it's never guaranteed. It's always maybes, ifs and buts, and all we can do is carry out our technical analysis, observe the markets, make predictions, forecast, and manage our risk. I'm going to set an alert down here in case price drops down to there, because for a long-term investment opportunity, that feels like a good place to me for buying. If we get confirmation, of course. Earlier in this video, I mentioned that I trade with the prop firm, the 5%ers. In fact, I have been trading with them for a few years, and last year I accessed the fully funded instant program account. This is also known as the Hypergrowth account. They offer 3 different programs for Forex, 1 for stock trading, and the Hypergrowth program is the one that I am currently trading. I am trading a $40,000 account size, and I profit from this account. That means that any profits that I make, I can withdraw those profits. The 5%ers keep 25% of those profits, and I can withdraw the remaining 75%. But what I love the most about this program in particular is the growth plan. This gives me a long-term focus for my trading. It helps me to stay motivated, focused, and patient and disciplined, because I know that if I focus on trading the best, on taking A-quality trades, on even just taking 1 or 2 wins a week, I know that that will add up, and in time I will be able to progress through each of these levels that the 5%ers offer, all the way to a $4 million account size. At the moment, I am working my way through this level of the $40,000 account size. Once I hit 10% profits, which is $4,000, it will be doubled to an $80,000 account size. So that is my focus. I have just got to stay disciplined and patient. If you want some more information about the different programs that the 5%ers offer, there is a link below in the description. Meanwhile, I hope you guys have a green week. I hope that you've enjoyed this video and gained something from it. If you have, do let me know by hitting that like button. Don't forget to subscribe to the channel below, and I'll catch you in my next video. Thanks for watching. Bye.